Talk to me a little bit about buying assets versus buying stock.
Well, if you buy assets, the beauty of buying assets is that you know exactly what you're getting. And obviously you could assume certain liabilities and there's no black box that you don't know what you're getting. But from the seller's point of view, they prefer a stock sale because they're going to get capital gains treatment. But if you buy a business with an asset purchase or an asset sale, depending on what side of the table you're on, keep in mind that you may need to have all the contracts that the business has reassigned or assigned to you, which could create some problems on this.
Got it. Okay. Um, Valuation is a big issue for many, for anybody that's looking to, to buy a business. But even as much of an issue is financing the transaction. So you have two chapters in the book about just that, whether you're borrowing money traditionally or you're looking for other sources of funds. Run me through some of the more common financing options that buyers usually take advantage of to buy an entity.
Well, most common one is to raise some equity and borrow the balance. And people will borrow it either from their local banks, their credit unions. You could even insurance companies will lend money and various other private individuals, but banks are the major source. But the Small Business Administration has programs where they will guarantee the loans to the banks. And obviously you're going to have to provide a guarantee to the SBA, but that also provides another source. The banks are out there, the SBA is out there. And so that's happening a lot.
Is there any type of financing that you find to be more or less popular among businesses? That you've seen? Is it generally traditional bank? I mean, even the SBA financing is usually through a bank. It's an SBA lender,
Right.
if it's a 7A loan or even a 504 loan. But I mean, have you been finding, particularly recently over the past certain amount of years, where they're getting more money from private equity or a private investor or family and friends or private lenders versus the traditional Wells Fargo or Citibank?
Well, and I've written I think I discussed this a little in the book, and I've written an article about this. A lot of times I see people going to community banks more
Yeah.
for a smaller business because they know the people, they know the business, they know the area, and they're more comfortable lending on this. And you're right. The SBA, it's better to use an SBA guaranteed lender. So you'll borrow the money from the bank and they'll go to the SBA to get the guarantee from the SBA, and the 7A and the 504 loans are ones. Private equity is generally for larger deals. Private equity is probably the most expensive money you're ever going to borrow. But at the same time, private equity is not adequately compensated for all the risk they assume. So
Right.
and also it's a validation if you could buy from get private equity, but it's generally not borrowing from private equities. They're gonna take equity in the business. Family and friends are good, but one litmus test that lenders use, and I always use, is how much is the individual and his or her family putting into the business,
Mm.
because that to me is an indication of their confidence on this.